the basic tools used for investment decisions based on discounted cash flows are net present value, that is NPV, internal rate of return, that is IRR, and profitability index, PI. In this discussion, it is assumed that the viewer is already familiar with these techniques. That's why these techniques will not be discussed anymore in this video. Okay. Now, selection of projects for investment when there is no fund constraint. Clear? That is, there is no limitation of fund. These are the projects A, B, C, D, all are available, and these are the basic information. Cash outflows in rupees thousands for project A is 200, and NPV has already calculated at 10% discount rate, 18.2. This is IRR, and cumulative NPV 18.2 in this way. For B project, the cash outflow or investment is this, and this is the NPV, IRR, and this is cumulative NPV. This plus this is the cumulative figure. And for C, the required investment is 100, NPV is 0, IRR 10%, and this is cumulative. It has not been changed, cumulative NPV, as the NPV is 0. And for the project D, the investment is this, and the NPV is negative 2.3, and this is IRR, and the cumulative NPV will be this, because this amount will be reduced from this 25. That's why 22.7. Then what will be your decision for selection of the project? Till the project gives positive NPV, it should be accepted. Okay, it is elaborated here. All projects with a positive NPV can be accepted, as they increase the wealth of the investor. We have to keep in mind the requirement of the investor. The investor is interested to get more wealth. Therefore, the projects A and B should be accepted for investment, as they give the positive NPV. You can check it again. A NPV is positive 18.2 and B also positive 6.8. That's why the project A and B should be accepted. Project C with NPV is equal to 0 neither increases nor decreases the wealth of the firm, while project D has a negative NPV and would reduce the firm's wealth. Instead of increase, it decreases the wealth. Hence, project C and D should not be accepted. Okay. Then what happens in the case of not limitation of fund, no fund constraint, all the projects which has positive NPV should be accepted. Next. Now, again, what is the definition of capital rationing? Actually, capital rationing means fund limited. It is not possible, not always unlimited of fund. Due to various reasons, internal, external fund may be limited. That is called capital rationing. And the decision making for accepting the project under capital rationing means selection of best combination of projects that provides the highest total NPV within the available funds. This is very important for capital rationing. Within available funds means limited funds, the funds allocated to the company or firm. Within that fund limitation, selection of the best projects which provides highest NPV. That is the decision of selection of projects under capital rationing. Next. Here we'll discuss the use of profitability index in the case of capital rationing. In the previous case, We have checked only the positive NPV, but under limitation of fund, we'll see that PI tool is more appropriate for decision making. How? These are the three projects, L, M, N, and these are the cash flows. Negative means outflow of fund, that is investment. That is initially for the project L, the investment or outflow of fund is 50. All figures are given in thousands. And these are the cash inflows. First year cash inflows is this, second year, third year. You can calculate it. I'm not going to show it. As I've already mentioned, you have the knowledge of calculation of NPV, PI, IRR. For the project L, the NPV is 12.94. Discounting factor is 10%. For the project M, the initial cash outflow is 25,000. 25 minus means outflow, and all these are inflow. The NPV is 8.12. And for project N, these are the outflow of fund, these are the inflows, NPV is this, and all these figures are PI, profitability index. How it is calculated? I think you know it. It is the ratio of present value of all cash inflows and outflows. If we rank them, the highest PI is this. That's why rank 1. The second highest, that is rank 2, is this for PI, and this is rank 3. Your fund is 50,000. Then how will select the project? You will select the rank 1 project first, because that will give more NPV per unit of investment, as it is the highest return. That's why you will select first within your limited funds, 50,000. That means we'll select first M, which require 25,000. Next, which one you will select? Next, you will select this project. What will be the NPV for that? This is the NPV. And total fund requirement is 25,000. That means it is possible, it is acceptable if you select the project 1 and 2, rank 1, project M and N within your limited fund, it is acceptable. But you can't take more projects. The NPV is highest for project L. If you select the project L, then what will happen? It is possible, as the fund requirement is 50,000, budget is 50,000. That's why if you select project L, it is possible, but you can't select any more project as your total fund has been exhausted. And in that case, how much? What will be the NPV? NPV will be 12.94. This is one alternative. But if you select as per PI ranks, then you will select M and N, which is also acceptable within your permissible limit of capital. Then how much will be the NPV, total NPV? Because you are always trying to get maximum NPV, maximum wealth. That will be 8 plus 7, 15.87. 15.87. It is more higher than this. That's why in this case, your selection of project as per PI ranking is best, is suitable. Now, see other situations. I think it is clear why you are not accepting this project. Its rank is third because the return of NPV per unit investment is lowest out of these three. It is possible to invest within the limited budget, but the NPV will be this only, as you cannot select more project in this case. So if you select this project as per the PI ranks, then you will get the highest NPV value. That means for single period investment, it is a single period investment, as all investments are being done in this single year, initial investment. In that case, the rule for selection of project as per PI rank is best. This has some PI ranking for selection has got some limitations that I'm going to discuss next. What are the limitations of PI? PI technique discussed earlier fail in the following situations. How it will fail, that I will discuss. When it will fail? Number one, multi-period capital constraints. Previous case, it was a single period investment and single period capital constraint. But if it is multi-period capital constraints, then PI will not be acceptable for selection of projects. How? Check all this. Projects L, M, N, O. This is the initial investment, as I've already shown in my previous case. 50, 20, all are in thousands. 25. But for this project, there is also a scope for a project. Initial year, it cannot be implemented. In this problem, one more clause is given. The budget allowed for capital every year 50,000. Will get every year 50,000. And this project, O project, could be accepted or started in this year, for which 80,000 capital is required. Then what will be your decision? Here the results for NPV are noted. Profitability index has been calculated as per formula. If I rank them, the highest NPV, highest PI is this, highest PI is this one. That's why I want first ranking. This is second, this is third, this is fourth. Okay. Now, if I consider selection of the project on the basis of PI ranking, then you should select first this M. 25,000 fund has been blocked. You have selected this, and the NPV obtained is 8.12. The second ranking is this. You will select this one also. So 50,000 fund is available. That's why it is possible. And what will be the outcome? The NPV will be 8 plus 7, 15.87. You could also invest to this project L, because 50,000 fund is available. Then what will be your result outcome? 12.94. But this option is good. This option is more better. That's why you will not select L if we consider ranking as per PI. But what happens in this year where additional scope for investment of this project require 80,000 funds? 80,000 fund is required. But for this year, budgetary allocation is 50,000 as capital. That is allowed. If 50,000 fund is allowed, and as per PI ranking, you are selecting M and N, then what will happen? 50,000 plus, this is the cash inflow, 10,000 plus 10,000. That means 70,000 fund will be available in this year. But to implement this project, 80,000 fund is required. It is not possible. 10,000 fund will be shorted. But if you select L, then what will happen? 30,000 cash inflows for this project and 50,000 fund as per budgetary allocation. That means 80,000. It is possible to accept L, and as well as you can implement O. If you select M and N, then it is not possible to implement O. So another alternative is to select L and O. And how much NPV in that case? You can check. 12 plus 6, 18 plus this and this that I'm showing in the next slide, which is far higher than your selection of MN. That means in this case, your rule for selection of project as per PI has been failed. It depends on the cash flows. That this is called multi-period capital constraint, multi-period, which is failed in this case. If you try to select on the basis of PI rank, I think it is clear. In this case, it is beneficial to select the third PI rank and fourth PI rank. You can check it. But still, the NPV will be highest. That means PI rule breaks in the case of multi-period capital constraint. Okay. Now, another case, project indivisibility. Indivisibility means partial implementation of the project will not give any positive NPV, any NPV, no earnings. Only the after completion of the whole project, then the expected result will come. It is not so. If the project is partially implemented, you will get partial result. No, it is not allowed. Then what will happen in this case? Again, I am reading. These are the projects A, B, C, D, E, F. All these projects are available in the market. These are the capital outlays. That means investment required 5 lakhs, 1.5 lakhs, like that. These are the NPVs. These are the PI. After calculation, the results has been noted, and these are the rank. Now the problem is, suppose 10 lakhs capital or budget has been allocated to the firm for investment. Then how you will select the project? Again, I will show you here that PI rule will be failed here. If we go as for the ranking of the PI, this is highest ranking 1.22. You can check, and this is second. That means we will select first this project A, for which 5 lakhs fund is required. And if you select the second rank is this, that means 3.5 lakhs of capital is required. Then how much capital already invested for A and C? 8.5 lakhs. That is third. This is third rank. Third project required 2 lakhs, but the balance fund is only 1.5 lakhs. It is not possible to accept this project. I have already mentioned partial investment will not give any NPV. No result will come. It is not allowed. That means your total NPV will be for A and C, that is 1,10,000 plus 70,000, 1,80,000. But instead of that, if you check various combinations of projects, various combinations of projects, various combination of projects, I am just discussing a specific case. If you select C, D, and E, it is possible to invest these three projects by 10 lakhs, 4, 3, 7, 8, and 2. And what will be the result? The total NPV will be this plus this plus this. And that is higher than the previous one, A and C. I have noted it here. That's why you should go for that option, as this is higher, and your full project could be implemented by 10 lakhs C, D, and E. You can check, it is mentioned here. As per PI selection of projects under limited capital, A and C, for which the total fund is this, that I have already discussed. And if you select C, D, and C, the total NPV will be 1,89,000. For in this case, A and C, the total is 1,80,000. That means your selection of project by PI rule is failed here, has been failed here. It is mentioned here, PI rules for selecting the projects have been failed here. Now this is the conclusion. What is the conclusion? The profitability index is useful for selecting projects when the firm faces a simple one period capital constant, not multi-period. So a simple one period capital constant is there. One period capital constant, then PI rule is useful. However, PI may not provide the correct selection of the project when capital constant extended over multiple periods, that I've already discussed. When the capital constant extend multiple periods, in that case, PI rule failed. Again, PI ranking rules becomes unsuitable or not applicable when projects are not allowed in fraction. This is the conclusion. To remove all these limitations, then how will tackle these situations? Please see my next video where I have discussed another technique that is called programming approach to capital rationing, where integer programming is used to solve all these situations. How we will select the project for all these alternatives. If you find this video useful, please like, share, and subscribe to support the channel and encourage me to create more useful videos on finance, investment, derivatives, and related topics. If you have any question, please write to the comment box. I will definitely reply at the earliest possible. Thank you. Thank you.